This is Christopher Lewis from the dailyforex.com trading desk, uh, doing analysis for the March 8th Forex session. And in front of you is the Australian dollar pair. You can see that I have a yellow box previously, and this was a consolidative move that we had after a rather impulsive move to the upside. There was no doubt that the trend had shifted to the upside. We slammed into the 108 mark and then consolidated for a couple weeks, which is quite normal for a move like this to see sideways or even perhaps a pullback in the action. If you take a Fibonacci retracement tool and draw it from the beginning of the move, you can see that there are a couple levels that are approaching, and the bottom of this consolidation was actually the 23.6% fib ratio, so a lot of traders would have been aware of that. Currently, we have the 100-day moving average just under the action from Wednesday, which produced a hammer. Also of interest is the fact that the bottom of the hammer is just about at the 105 handle, which of course is a large round number, and it will attract certain traders. With all of these things combined, this pair does still look bullish, and now we simply have to make some kind of assessment on what could be next. The reason I chose this chart for this session is that it's a perfect example of what kills the small trader. Many small traders will see a move like this, will buy into it, and get caught in the sideways grind as they try to cash in on what is obviously a very strong market. However, there are traders who are more professional by nature and can wait to see a setup such as this one, where we get a hammer and moving average at a round number in an uptrend. Many traders are too busy trying to chop back and forth, trying to buy when it's too late. They see the shooting star here and at the 108 measure, which by all means looked like a weak signal. So they'd sell there and perhaps maybe make a little bit, but they're too busy not looking at the big picture. And this is a big picture trade. Will this pair rise from here? I do not know, but the signals do tend to kind of push it in that direction. With that being said, classical technical analysis dictates that a break of the top of the hammer does suggest that we will rise higher. The first and most obvious move will be to the 106 level, where it'll run into the bottom of this, and we'll see if we get through. We should, because it is with the trend. 108, without a doubt, will be a very interesting place for this pair once we rise that high, as it should continue to be resistive. The thing about this pair in the past is that it also was a daily triangle that you can see we broke out of, which measured for a move up to, once we broke out, to 112, which we haven't seen yet. So it looks like we're getting the nice breakout, a little bit of sideways, maybe even a little bit of a pullback, and until we break back below the top of this triangle, there's really no reason to think that the Australian dollar should be sold. Yes, there are people that have made money selling it, but the real money is going with the trend, is being able to ride out this type of move all the way up. And that is what separates the professionals from the amateurs. We have a good buy signal if we break higher on the session. This is the type of trading, if you were patient enough, can make your account grow in a very steady manner. One of the most famous traders of all time, Jesse Livermore, remarked that quite often we are paid to simply sit and wait. This is a perfect example of something like that, assuming it works out. Again, no trading setup is 100%, but this has a lot of things going for it. And on the fundamental side, you have to keep in mind that the central banks are still throwing liquidity in the marketplace. This will cause demand for things that are physical. Commodities, in other words, stuff, especially stuff that's heavy. In the words of Dennis Gartman, stuff that if you drop on your foot is likely to hurt, meaning things like gold, copper, aluminium, iron, and various other hard assets. Australia has an overabundance of all of these. If that's the case, the Australian dollar should continue to climb in value. Going forward, 104 is a bit of a line in the sand, and you can see that there'll be a little bit of a buffer zone there, but that's a nice area to expect massive support, massive buying. Certainly, there's only one way to trade this pair if you plan on hanging on to anything more than a quick scalp, and that is upwards. On a break of the Wednesday highs, I will most certainly be long this pair again.